Hey guys, Brian Mahone here. It's Sunday morning, just had my coffee and wanted to sit down and talk to you about life insurance and comparing whole life insurance and term life insurance. We're going to look at some actual quotes that I did for myself, get into some needs analysis, how much life insurance you actually need, why would you need it, get into the infinite banking concept of, whole life building a cash value, and also look into some riders that you can attach to a life insurance policy. So I'm going to go ahead and try to share my screen with you here, pull up some of this. So here we are. First, we're going to look at the term life insurance here. So this is for myself, a $500,000 policy value. I got this quote when I was 23. I'm 24 now, but I don't smoke. I'm pretty healthy, so I got the best kind of preferred best rating. This $500,000 policy is $30 a month. For 20 years, I would pay the exact same price, $30 a month or $360 a year. You'll see all the way down to when I turn 44, the price would increase. Now, at that time, you can decide whether you wanted to keep going or not, but life insurance is based off of morbidity and mortality tables. So it all has to do with gauging how close someone is to death. Next, we will look into the whole life insurance policy. So you'll see, if you keep scrolling down here, it gets ridiculous. An 85-year-old is going to cost $160,000 a year for a term policy. You would never buy that. But going to the whole policy here, which again, this builds a cash value, and you'll see this different column here. It's $370 a month. That's like a car payment. Instead of a Netflix and a Hulu subscription, $20-30, you're looking at maybe a car payment, $370 a month. Again, for the same $500,000 limit, for 20 years, I'd pay almost $4,500 a year for 20 years, but then I would pay zero. And this death benefit would always be there my entire life. And this cash value would just build and build and build and build. So you'll see as you scroll down, this builds and builds and builds. This remains zero forever. You still have the death benefit. You still have the death benefit. And a lot of policies just go up to 105 years old. Oh, well, there it goes. Keeps going. So that's the whole policy. If I can get on my next tab here, sorry, it's hidden behind. So how much life insurance do you need? You can Google, how much life insurance do I need calculator. This one came up from NerdWallet. Does anyone depend on you financially? Yes. You can hit no, and it tells you, you don't really need insurance, life insurance, and then all these questions pop up. So I went and filled out these questions for myself and found out that, how much annual income would we need? We have about $3,000 a month in expenses. So I rounded that up to 40. Maybe we need it for 10 years. How much debt do you have? That's our mortgage balance, 88,000. How much money do you want to provide for your children's education? Maybe you have one or two kids. I just put a nice round number of 100K in there. That's probably low if you're trying to fund, a master's or an entire 4-year college. So it does give you some numbers here. How much would your family need to pay for your funeral? I put 6,000. I think funerals could be more than that. If depending on what you do. I think I'll just get cremated, so that's why I put up that number. How much money do you have in savings and investment accounts? Put 15 grand. How much life insurance do you already have? I don't have any. How much after-tax income does your family have annually in addition to your income? I just put zero. So you'll see it comes up with a nice round number. So I'd want to consider, a $500,000 to $1 million policy. Maybe I could do 750,000. For our unique kind of situation, we don't have any kids, so really we don't have any dependents. We don't really need life insurance for that. me and my wife had a conversation, said, hey, something happens to me, you can sell our rental property, you can depend on your family and your job and support yourself. Something happens to you, I'll be able to support myself. We do have that rental property. We'd probably just sell it if one of us passed away and we couldn't afford the mortgage anymore. And then there's the whole concept of buying whole life insurance and investing the difference. So in my case, if I choose not to go with the $370 a month payment for the whole life insurance and subtract the difference of what term would be $30, and I go invest $340, and maybe I put that in some index fund and get 8% return on that, that'd be great. But are people who are buying term life insurance or whole term life insurance actually doing that? Are they actually making that investment? So we invest $500 a month into an Acorns account and a Roth IRA with a Vanguard ETF. At the moment, we wouldn't be able to afford an extra $360 per month. So term might make more sense because it's more of just a small $30 payment. I mean, that could be you eating out once a month. Just get rid of that. You could afford your term life insurance pretty easily. I am a licensed accident, life, and health agent, so I am a fan of life insurance and whole life insurance, and especially this book, Becoming Your Own Banker, Unlock the Infinite Banking Concept. This pretty much is talking all about those whole life insurance policies that build a cash value. And if you need to pay for your kids' college, or you want to go on vacation, or you want to buy a rental property or a vacation home, or maybe just upgrade your house, you have one of these big financial investments, you don't need to go to a banker. You don't need to go get a loan. You can tap into that cash value in your whole life insurance policy and take a loan from yourself, which is very cool. So that's what this whole book is about. I mean, you can Google that concept. There's Reddit pages about it. It's really, really, really interesting. Um, One other area I wanted to jump into really quickly was riders. So a rider is kind of like an endorsement. When you're going to buy life insurance, you can attach a rider. It's a little bit more premium, a little bit more money, but there's three kind of basic ones. A child rider. So you're a parent and you bought life insurance on yourself, and your child passes away. You could actually get some coverage for that situation. A waiver of premium is you are a parent and you're the policyholder. You bought life insurance for yourself and you get sick, or you get injured, or you're disabled, or maybe you got laid off from the coronavirus. Temporarily waive those monthly payments for your life insurance, and attach those kind of payments on the back end of the life insurance policy, and be able to maintain your policy and not pay it at the same for a brief period of time. The last one is accidental death benefit. So, you have that $500,000 life insurance policy, and the policy owner passes away in some sudden traumatic accidental event, maybe a car accident or something. The policy will have details and a description of exactly what counts to kind of unlock this accidental death benefit. But all this is giving you more coverage than that 500,000. Maybe it's a $50,000 additional coverage. You can tweak that as well. So if you had any questions about life insurance and term versus whole, or you want to look at universal index life insurance, I'd be more than happy to chat with you and kind of look at the needs and the prices and see if it makes a fit for you and your family. Thanks.